After seeing its worst day in nearly 3 years, gold is still under pressure this Wednesday. So what's really driving the price right now? Joining us is Kitco's Global Trading Director, Peter Hugg. Pete, thanks for being with us. I'm sure a lot of people will be happy to hear from you.
Maybe, maybe not. Nice to be here.
Well, we saw gold hit a 3.5-month low yesterday. The pressure seems to have spilled over into today, despite a short-lived bounce early Wednesday. Where does gold go here? Go from here, Pete, and try and make some sense of it all for us here.
Well, I think Monday morning turned out to be pretty much a perfect storm before the markets opened. We've been saying that the market needed a catalyst to break to the upside. We were very somewhat disappointed earlier this year when gold failed to break up through 1375. But when you come back into Monday morning, gold opened around 1308. Into a market where the Chinese were off, so there was very little physical demand. An announcement coming out of the UK that Brexit was going to go forward in March of next year, which hurt the pound to drop to a 31-year low against the dollar. In dollar trades against a basket of currencies, that weakness of the pound in that basket caused the dollar index to break up through resistance, so you had dollar strength. And still a lack of any new catalyst. You had the Fed coming out again speaking somewhat hawkishly. So the traders tried the $1,300 level, which was psychological support, to see how resilient the bulls were. It hit 1,300, didn't last long, broke through it. Once it broke through it, humans had nothing more to say with it. Computer programming came in, stop loss triggers were hit. And the market came down. Now, I thought it would hold the 1285 level. It did. It traded there for about an hour, 1285, 1290. But then a new wave of selling came in on rumors that the ECB might be tightening up on their monetary easing, which I do not believe to be true. But that was the next spout of selling, which broke it through the 1285 support level and took it down to a pretty key level, which also held this morning, which was 1268, from which we've got a bounce and got gold up approximately $8 from the low today. So that perfect configuration of events that occurred Monday morning, especially with the biggest physical buyer in the market out of the market for the next or for the forthcoming week on Monday morning, basically was enough to take gold under 1,300 with some selling pressure.
Pete, do you think it's interesting how concerns over Brexit aren't helping gold this time?
There's no real concerns. It's more that Brexit is now going to be a fait accompli. They're not going to reverse their decision. And the impact was on the pound. I think the impact on the pound is premature, and nobody really knows how this is going to play out. Once Brexit officially launches in March of next year. It's going to be a 1.5, 2-year process. The Brits are going to have to renegotiate trade deals. They are still a very strong financial powerhouse in the European system. It wouldn't be in anyone's interest to shut the Brits out. So, I think they're going to come up with relatively good deals. Their currency was not the euro, it was the pound. So that's going to make it easier for the Brits to leave. So I think it's a bit of an overreaction, but again, it's all perception. The pound got hammered, which brought the dollar index up through resistance, right, which it had bounced off a number of times. And that was just enough of a catalyst to take the edge off the commodity market.
All right, and just to wrap now, Pete, can we expect more range-bound trading then for gold?
There may be some more in this market on the downside. My key level right now would be the 1258 range, which is the 200-day moving average. If we lost that, I think the computers and the technicians may sell it again. But again, unless I'm living on a different planet, I have seen absolutely nothing that has changed between now and early Monday morning. I do not believe the Europeans are going to tighten. I do not believe the Japanese are going to tighten. If anything, I think the Japanese are going to be more accommodative. And the Fed, my feeling on the Fed, they're not going to go in November, not a week before the election. So if they go in December, maybe they go a quarter.
Right.
But again, the monetary stimulus that's in this market, I think, will be here to stay for at least the next few years. And I think that's underlying bullish for the metals. And And I think there are potentials for accidents to happen, i.e. Deutsche Bank, although I'm not as negative on Deutsche Bank as some people are, but i.e. those types of events are certainly within the realm of possibility. And it wouldn't surprise me coming in one day and seeing gold up 50 as opposed to down 40 like it was on Monday.
Thank you, Peter. And last time I checked, you're still on planet Earth. Thanks for being with us.
Thank you. Bye-bye.
And thanks for watching Kitco's Gold Report. We'll see you tomorrow.